Good morning. It's Monday, September 12th, early in the day. It's 8:30 on the West Coast. We're going to look at currencies this morning. The US dollar is currently pulling back. And what we're going to see is that in the past week, all but one of the currencies that make up the US dollar has either hiked interest rates or had one of their talking heads out in front of the camera, spouting bullshit. And of course, I say this repeatedly, but we have to remember that banks only have two tools in their toolbox, regardless of what they want us to believe. They only have two tools. That's talk, bullshit, blarney, whatever you want to call it, and a printing press. And so, all of their other mechanisms, tools that they want us to believe in, they don't exist. They got blarney, they got a printing press. But anyway, and then similar for politicians, politicians really only have the same two tools. They got bullshit and a printing press. And of course, the government runs the printing press. Now, governments do have a third tool, and that is their ability to persecute people. Notice I said persecute, not prosecute. And lock them up and do even worse than that. And so anyway, governments do have a third tool besides BS and the printing press. But anyway, neither here nor there. We're here to look at currencies. Again, these are the contents of the dollar basket. We got 6 currencies. The first 3, it's a weighted basket. And so the first 3 currencies in the basket make up 83% of the US dollar index. So here in the monthly time frame, we can see that the dollar this month it peaked at it's 110.785. So it didn't quite make 111 before pulling back. Currently, this is a very bearish candlestick, and so easy to say that dollar has topped, got some overthrow on top of this horizontal support resistance level, but now it's topped and rolled over. That remains to be seen, but currently that is a bearish candlestick. If we look at MACD, we can see that it almost reached this level of the prior high in MACD, where it would be reasonable to expect a pullback. Didn't quite make it to that level, or hasn't made it there yet. We can see in the histogram that we've gone from dark green to light green, which tells us that momentum has slowed down. Momentum is still to the upside, and based on MACD, we're still in bull mode, suggesting that the primary trend remains upwards, and energy is very elevated. So the dollar could certainly continue higher in this time frame, although it looks like a pullback right now. In the weekly time frame, again, we peaked last week, rolled over, got a somewhat bearish looking candlestick last week, and then now this week, currently, we're bouncing off the 10-week moving average. MACD remains in bull mode, has not given a sell signal yet, although it looks like that could be close. We may get a sell signal here shortly. Energy remains very elevated. In the daily time frame, we can see that the dollar is bouncing off support at the lower median line of this modified shift pitchfork, currently dealing with now resistance at the 20-day moving average and resistance at the underside of this support resistance zone. So 2 levels of resistance overhead. Notice that we have a MACD sell signal. And again, MACD was very overbought, but had not reached up to the level of this, the prior 2 highs. So anyway, new sell signal in MACD, although the primary trend remains up based on MACD. Energy has dropped down into the low end of the range. So that's the US dollar. Now what we're going to see is, like I said, all of the currencies in the basket except the Swedish Krona have had either a talking head or a raise in interest rates in the prior week. Now, before we look at the euro, I want to make sure you're aware of this move by the EU. Basically, they want to enact emergency power over all EU businesses. Basically, they want to get wartime authority over EU businesses. They want to be able to mandate what a company manufactures, whether they manufacture anything at all, hours of employment, pay rates. Basically, they want full control over all EU businesses. Now, we'll see whether they get those powers or not. But just be aware that that's going on in the background as the Eurozone drops deeper into bad territory. The euro can't exist without Russian energy. That's been true for decades. There have been attempts, analysis for other energy sources for the Eurozone, and they just don't exist. There was a brief period when it looked like Iran was going to fall, and the Western powers would be able to route Iranian energy products up into the Eurozone. That changed, and the pipelines that were in planning that would have taken advantage of Iranian energy products, that pipeline fell off it was no longer being planned for because it wasn't realistic to get a hold of Iran's energy products. Notice at the current time that Israel is ramping up its rhetoric against Iran yet again. Last week or the week before, we had the Israeli Prime Minister, so the Prime Minister, one of the talking heads from Israel, standing in front of a fighter jet making noises about getting tough on Iran. And so anyway, in the big picture, the only alternative for Russian energy for the Eurozone is a takeover of Iranian energy products. We'll see whether that happens. And of course, that's not a short-term solution. That's not going to help the Eurozone for this coming winter. Now, what caused the euro to bounce, what is currently causing it to bounce, is that the ECB raised interest rates last week by 0.75 of a point. Took the rate off of 0, and they're also threatening another 0.75 point raise next month, or no, I guess it's October, and then another 0.5 point in December. So the euro is currently rallying because of interest rate hikes. And so we can see here in the monthly time frame, the euro is bouncing off support at the lower median line of this Andrews pitchfork. MACD is still in bear mode, suggesting that the primary trend remains downwards. MACD histogram is hinting at an upturn of momentum. Another way of thinking that is that downward momentum is softening or weakening. Energy still remains very low in this time frame. In the weekly time frame, we can see that the euro has bounced, and of course, very oversold. All of the currencies in the basket of currencies that make up the US dollar, they're all very oversold. They've been in technical downtrends for months. They're ready for at least counter trend rallies, if not a more sustained uptrend. And it remains to be seen which one of those two possibilities we're going to get. So far, this is just a counter trend rally. And again, MACD in bear mode, we do have a new buy signal. You can see that the histogram has turned green, new buy signal in MACD, energy rising off a very low level. So bounce in the weekly time frame. Daily time frame, again, bounce has risen above the 20-day moving average, risen above the 50-day moving average, although currently right at that level, trying to decide whether the 50-day is going to be support or resistance. Notice that price has popped above the upper median line of this modified shift pitchfork and appears to be finding support at that level. MACD in bear mode, but on a buy signal and rising. Energy just above mid-range and rising. So euro currently headed higher based on rising interest rates. Bank of Japan did not raise interest rates, but they did come out in the past week and say that if the yen continues to fall, they will have to intervene in the currency. And so just the fact that they got a talking head in front of the camera that made the right noises about the yen has given it some strength this week. Now, the thing to understand about the yen and whether it's going to be weak or strong, Japan remains committed to a soft monetary policy, and one of the ways they're implementing that policy is by mandating a 0.25% cap on interest rates of the 10-year bond. And we can see that here, this pink dashed line, that's 1/4 point. And you can see how price, the yield on the bond, is finding resistance at that level. Well, the reason there's resistance at that level is because Japan's central bank is printing yen to buy bonds. They're suppressing yield on the bond by printing currency. And so, that's not a sustainable policy, actually weakens the currency. And so, they can jawbone about intervening in the currency, but they can't have it both ways. They can't print currency to buy bonds and have a strong currency at the same time. The two just don't go together. So here's the yen in the monthly time frame. We can see that we're currently getting a little bit of a bounce. MACD still in bear mode, energy very low. In the weekly time frame, again, we're bouncing off support at the lower median line extension of this shift pitchfork. MACD in bear mode on a buy signal, but just barely. Could be close to a new sell signal. Energy very low. Yen in the daily time frame, again, we're bouncing off support at the lower median line extension of the shift pitchfork. As I pointed out a minute ago, all of the currencies are oversold, ready for at least a counter trend rally, if not a sustained uptrend. So MACD in bear mode, histogram showing that downward momentum is weakening. Energy is still very low. The pound, and so we've got a new prime minister in the UK, Liz Truss. And if you read what analysts think about Liz Truss, they basically don't think much of her, don't really expect much out of Liz Truss. So far, she's just regurgitating economic policies from past leaders who had success with their economic policies, but they were operating in a different economic environment. And so regurgitating those past policies in the current economic environment, there's no reason to expect that her policies will see success. So anyway, not expecting much from Liz Truss. The pound evidently this week is bouncing because there's expectation that Liz is going to announce an economic plan, salvation plan, which of course, like I was saying, politicians only have two tools. They've got bullshit, hot air, talk and a printing press. And so this expectation, what they're expecting is that Britain will print pounds to rescue the economy. And so, printing fiat currency, that provides temporary relief, but in the long term, it just further weakens the economy, weakens the currency, creates inflation, which, exacerbates the cycle. Inflation makes the economy worse, etc. So anyway, short-term bounce based on a new prime minister in the UK. We'll see how long that lasts. Here in the monthly time frame, we can see we've got a bounce. MACD still in bear mode on a sell signal, energy very low. In the weekly time frame, we can see we're getting a strong bounce. But again, this remains a technical downtrend. High, low, lower high, lower low, lower high, lower low. That's the definition of a technical downtrend. Until it proves otherwise by breaking above this prior high, this remains a technical downtrend, and all we can say about this so far is that it is a counter-trend rally that will most likely peak and then roll back over. And a likely target for that peak is the 10-week moving average. Now, counter-trend rallies tend to be very fast and impulsive, and we can see that we got a gap. So this week's candle opened with a gap, which is an indication of an impulsive move, which again supports the idea that this is nothing more than a counter-trend rally. MACD remains in bear mode on a sell signal. Energy is very low. In the daily time frame, the bounce is obvious. We got a little bit of a bounce on Friday. It's continuing today, currently finding resistance at the 20-day moving average. We've got a new buy signal in MACD, but MACD remains in bear mode, suggesting that the primary trend is down. Energy just about mid-range and rising. Bank of Canada raised interest rates last week, 0.75 of a point, and again is indicating that there are more interest rate hikes to come. And so the loonie, the Canadian dollar, is bouncing based on interest rate hikes. We can see that here in the monthly time frame. We've got support along the lower boundary of this down-sloping range, mostly sideways, but slightly declining trading range, and currently bouncing off the bottom of that range. MACD is in bull mode on a sell signal. Energy is about mid-range. In the weekly time frame, same thing, bouncing off support, finding resistance currently at the 10-week moving average. MACD in bear mode, energy mid-range. Big bounce in the daily time frame, started midweek last week, has pressed up through the 20-day moving average, found resistance at the 50-day average, and rolled over from that level. We've got a new buy signal in MACD, although it remains in bear mode. Energy is mid-range and rising. The Swedish Krona is bouncing slightly, but didn't see any talking heads. I'm not aware of any of their talking heads in the last week. They didn't raise interest rates in the last week, so they do. Here in the monthly time frame, we can see that they had reached a level where support was possible. The lower median line of this modified shift pitchfork, it appears that the Krona is bouncing from that level. MACD in bear mode on a sell signal, energy very low. In the weekly time frame, again, very oversold, technical downtrend for months, getting a bounce off of support, finding resistance at the 10-week moving average. MACD in bear mode, looks like it's on a new buy signal. Energy is very low. In the daily time frame, we can see the bounce in the Krona, finding resistance at the 50-day moving average, pulling back from that level. MACD in bear mode, but on a new buy signal, energy rising just above mid-range. The last currency in the dollar basket is the Swiss franc, and so they didn't raise interest rates, but they came out and, again, talking heads, their talking heads came out and said that they welcome the franc's appreciation. Basically, they gave the market an indication that they are not going to intervene in the currency markets in an attempt to weaken the currency further. So again, the fact that their talking heads got out and blew hot air gave the currency strength this week. We can see it in the monthly time frame. We're getting a bounce. MACD is in bull mode on a sell signal currently. Well, no, MACD is mostly in bear mode on a sell signal. Energy is mid-range. Bounce in the weekly time frame started last week, continuing this week. Looks like we're pushing up into resistance at the 40-week moving average. MACD is on a buy signal, still in bear mode. Energy just above mid-range. Very strong bounce in the daily time frame. Found support last week at this horizontal support level from the prior low, and also the lower median line extension of this modified shift pitchfork. And so big bounce, pushing up towards potential resistance at the 200-day moving average. And as I said before, counter trend rallies are sharp and quick. And so to my eye, this is a counter trend rally, very impulsive. All of these price bars are very high energy, impulsive price bars, which suggests that whenever this move finds resistance, likely at the 200-day moving average, it's going to roll over and the franc will head lower again. We do have a new buy signal from MACD, although it remains in bear mode. Energy is almost at the high end of the range, currently still rising. So that's it for the currencies. Weakness in the US dollar is based on strength in the currencies that make up the basket of currencies in the US dollar index. And so we'll see as the week progresses what happens with the dollar and what happens with the other currencies. But that's what we've got for now. Have a fantastic day, and I will talk to you soon, folks.